Now, there is actually another zone that I haven't mentioned yet on the course that you need to be aware of. I've mentioned it in trade examples, but I haven't actually told you anything about it that you need to be aware of because it helps with targeting and going break even, and it's pretty essential really. So what I'm actually talking about is the current session's high or low, because if price has already rejected it once in the current session, it can do it again. There is a probability that it will do it again. So you need to add this zone onto your zones where you're targeting and going break even. So your lower time frame zones, you should know them for each session, each pair. Now you need to add on the current high or low for the actual session that you're trading. So for example, this is an example I'm going to show in London session on GJ. So the trade idea, it was just an Asia low buy like that. This was a 15-minute. You can see it's all tying in now. I'm tying all these videos together now. The 5-minute closed below, but the 15-minute ended up giving us the entry like that. So it was a nice 50-minute candle. The only thing about this is the stop was huge. So I don't know if I'd take this, but it's a good example for me to show this video anyway. So the stop was actually down there. The stop was 40 pips. So I don't know if I would take that one, but that's not the idea of the video. So I'm going to go on the 5-minute now. What I'm going to draw on is the current London high. So where did London actually reject at this point in London session? Now, this is the zone we have on. So this is the zone we need to be aware of. Back onto the 50-minute now. Because price was bullish and we were rejecting Asia low, we were expecting a push past this point. So we would target probably Asia high up there. So it would have been a nice trade like that. You target up there, but you have to be aware of this zone here. So this is another zone you need to be aware of. And you're either at these zones going break even or you're taking profit. It's just the same as the other zones. So now we have this on, I'm going to show you exactly what happens. So price pushes up like that, and it actually taps into the current high for London session. At this point, what do? You go break even, because we wouldn't have secured there, because it was, how much was it? It was a risk reward of not even a 1-to-1, so you wouldn't have secured there. You were, like we said, we were targeting the Asia high, but you would go break even at this point. So from this point, you'd go break even, because there is a chance, it's not a huge chance, but there is a chance that price could end up rejecting this current London high right here, because it's already rejected it once in this London session. And from this point, what happens? Well, price actually does end up rejecting it and go all the way down and would have stopped you out. So this is why you had to have been break even. So this is kind of another zone that you need to be aware of that I haven't talked about yet, that you need to kind of start implementing whilst you're in a trade. So during the session you're trading, if it's clearly rejected a point once, it might reject it again. So you should be going break even at that point, as long as it's over 20 pips, because remember, you can't go break even if your trade isn't at least 20 pips up. Otherwise, it doesn't have enough breathing space. So that's an example in London session. Now for US session, this is just a buy off of the previous day's US low. It's a break and retest buy to the upside. Now in terms of targeting and break even, the next zone up was the previous day's US high, which was also a zone we tapped into in the US session. So here is another point. If there is a US zone and price has already tapped into it in the session you're trading, if you're targeting this, you have to take your profit there. If you're not taking profit, you have to go break even. It's just simple as that. But you probably want to be taking profit like this because it's already rejected a previous US zone in the current zone. So the chances of it actually breaking through this are not high. So this is the current high for the US session that this trade was taken in, and it was US zone. So it's a very strong zone. If I show you what happens, price pushes up, taps into it, and then just comes down and starts messing around like that. So it rejected it again because it's the same zone. This is why once it had tapped into the current high for the session, you had to have been at least break even. In this case, you actually probably would have taken profits because this was such a strong zone, and it is just very risky to hold through zones that are that strong. And another point here, actually, if I just drag this down, well, if I just show you right here, this 5-minute is a clear rejection candle to the downside. So if we were looking for sells, that's a very good opportunity to sell. So once you saw this 5-minute candle, you would have wanted to close out your trade. You'd have been in profit, and it's just managing your trade. Because once you saw that 5-minute rejection candle at a very clear zone, which not only had been rejected in the current US session, but also in the previous US session, once you saw that, you've then just immediately got to think, okay, we're definitely rejecting this zone. Let me get out of this trade before it pulls back against me. So the point of this targeting 2.0 is that the current session you're in will have a high, or if you're selling, it'll have a low. And this is also a zone that you need to add to the arsenal in terms of going break even or targeting. So now you should know all about where you're targeting and where you're going break even. It's just zone to zone to zone to zone.